Are you struggling to remain profitable and blowing up prop accounts over and over and over again? I have failed plenty of prop firm challenges, just like most people watching this video. I've gone through all the rungs of trading and I've come up with two simple strategies to get you out of drawdown. And today I want to go over those strategies real quick in a short and sweet video so you guys can start to follow along. So let's get right into the trades that I took today. Okay, so let's recap on how I was able to make 2% while hedging positions. I took two trades and I only have one of them set out here, but I want to go through what I was looking for on Euro JPY. Okay, so first and foremost, we have been in a downtrend. However, we have pulled a primary liquidity area and we're actually starting to move up, okay? So we came down and retested and we actually broke above this. Because this is a very strong sell-off, I'm expecting this pivot to get taken out. So I'm just gonna bet that I can predict and interpret what the market is going to do on a smaller time frame. However, this could continue going up and take out this liquidity, or we could continue in a downtrend. So I need to just play off of what I can interpret right now. Okay, and during New York session, we had gone into this area, which was a big buy zone for me, and I missed this trade. Okay, here is when I saw it and I was really hoping we would get a retest. Instead, what happened is we pushed all the way up here, and in the morning I had seen that we'd pulled down into this area and we're starting to push up, and I took my first trade. Now here is how I managed this through drawdown, okay? So measuring out this whole area, this gold area right here, this is the 50% Fibonacci, so a 50% retracement, and this is where I took my very first trade on this. So all my stops were going to be underneath this pivot, but I was going to double my positions, small positions, waiting for a possibility to catch the trend moving back up. So using a high position, high margin, and tight stop will blow your account. So you need to stop doing that first and foremost. Betting 2 to 3% to make 10% is a loser's game. Okay, you cannot make money that way. At least not until you've been trading for maybe 10 something years. But if you're struggling to be profitable, the best way to make money is actually to risk very little. So I was taking 0.5 lot positions on this, trying to make 1 to 2%. Okay, so I was not willing to risk more than 0.5% on any one entry, which gave me a lot of room to move here. So I had primary areas marked out, okay, and I'll mark them out here for you. We had the 50 right here. We had another extremely large liquidity area here. We had a breakout retest area underneath this pivot right here. And then we also had a really aggressive push up here as well. Okay, so this is what I was doing with this trade. As I entered here with one lot, so two entries, 0.5, I was targeting a break of these highs and a retest of these highs, okay? Those are the two targets I was going for. So I was targeting here and here, okay? As this pushed up, I bought two and it went down to the 0.5. I bought two more, okay? As we moved into this liquidity zone, I bought two more. I had two pending orders here as well. And each time I bought with slightly larger increments. So this was 0.5 times 2. This was 1 times 2, so 2 lots. This was 1.5 times 2, and this was 2 times 2. So 4 lots, 3 lots, 2 lots, 1 lot. Got it? So all I am planning on doing is I want the opportunity to either get out for the whole position at break even or close my first positions at break even when the trend starts to continue for me. Okay, and by leveraging By adding more of a position size each time, I am taking the risk that I could potentially lose more money. But knowing how liquidity works, I understand that we will most likely get a retest of one of my entry areas. And if I can double down on a position, still using small position size, which is key. I'm not buying 100% of my margin. This entire trade would have taken up less than 25% of my total margin, which is very important to go over, okay? So taking up less than a quarter of total margin and risking no more than 2.5%, maybe 3% on the entire trade, with the very, very high probability, almost 100% probability that I will be able to still make money on this trade even if I go in drawdown. Okay, and there is a 100% probability that I will be able to close out the majority of my position for a small loss if it does move against me. Because as we take out liquidity, what do? People take profits. So it will push up into that area and then either push down and then push up, or it will push up into the break-even area and then fall continually. Okay, so once an area of liquidity has been pulled to the upside, then it could potentially fall very hard. But it will not fall all the way through this without some kind of pullback first. Liquidity must be taken out for this to continue lower, and it must be taken out for it to continue higher. I'm not sure if it's going to go lower. I'm not sure if it's going to go higher, but I do know that as we take out these areas, we will bounce out of them, and I will have an opportunity to either close my position at net zero or a small loss. And in the event that my first entry immediately goes in my favor, I will make a big profit. If it goes against me, I go in defense mode, and now I'm trying to go break even on these trades and potentially make a profit on the other entries. And this is how I manage my trades. Okay, so I don't need to take big losses, and I don't need to take losses very often. Most of my losses are small or break even because I am able to get out once we pull an area of liquidity. As this pushes up, I buy. Immediately go in drawdown, I buy. Go in some more drawdown, and I push back up here. Okay, and as we start to move back into this zone, I'm able to close both of these positions out for break even. Now, because I have 4 positions, I do not need to hold on to all of them in case we go into drawdown. So I am going to look to take some of my profits off. As we rejected this area, I was able to close a quarter of my position. Okay, and again, I'm still anticipating that we're going to continue higher, so I want to give this some room to breathe. I'm not going to move my stops to break even just yet. Okay, because it hasn't shown me any aggressive selling, and we have not broken any highs yet. I'm anticipating that if we are going to sell off, we need to break a high of liquidity for there to be enough sell volume to break through such a bullish structure. I don't know if it's going to sell off after that or continue higher, but that's not what's important. What's important is we need to take out this high. Once we take out this high, I know that my trade has a finite stop, and I will move my stop up accordingly. So we pull back down to our entry here, and we're still in this trade. We have 75% of our position, okay? As this moves up and breaks this high here, I take another 25% of my position off, and I move my stops up to underneath the pivot. So now I am risking about 0.25% on the entire trade. I made money on my second entry twice. I closed out that entire position. I got a net break even of my first entry, and now I am able to ride this up to my targets and risk very little money. So my final entry was able to give me quite a good RR. And I also want to bring up this indicator that I use, and I've been promoting it. It's not my indicator, but the volume positive and negative levels by Chart Prime. So this is kind of like a nice little footprint for me, and I have noticed that these gold levels act as resistance and support very well. In a bullish move, when price comes back to a purple and or a gold zone, this is a buyer-seller imbalance. There was a lot of buying and selling in this area. Selling when above it is support. Buying when below it is resistance. So if I see a price move aggressively up into a gold area, I will look for shorts. Okay. If I see that it has broken above it and comes back down and bounces out of it, I will look for longs. Okay. Same thing with selling. If price goes into selling and from an above place, I will look for buys. Okay. Because these sellers are looking to get out. So on this final entry where I entered at this area right here, this was my final entry. There's no reason for me to move my stop to break even because it's pretty much a break even trade regardless. I had an entry here and I was able to close out for a 1-to-1, and I had an entry here and I was able to close out for a break even, right? It never went into my targets. It immediately moved against me. So now in defense mode, I just want to get out for this for a net zero. Maybe I close half of my winning position out to cancel out my entire losing position. Because I've doubled down a little bit, still small size, not risking too much money. Okay, so as this entry goes in my favor and I bought just as this pushed off the tick line right here, okay, this is now what my trade can look like. And this is how I am able to stay profitable, okay? As this moved up into my first area, I didn't want to get a rejection and I closed this trade out, the entire trade. And this was effectively a 15.83 RR trade. Okay, my first trade was a net zero. My second trade was a 1-to-1. My third trade was a 16-to-1. So my smooth win rate on this entire trade ends up being about an 8-to-1. Okay, now aggressively moving up into this area, I want to tell you what I was looking at the 5-minute and 15-minute, and this is an incredible scalping strategy that works so well, and I'm going to tell you exactly how to do it without risking a lot of money. We have an aggressive, exhaustive move, okay, and as we are breaking above this level, I see that we push this wick just like this, okay? So now we have a green wick and I am expecting this body to fill, and I can take an aggressive trade every time this moves up, expecting that we will pull back down into this area. Why? Because a wick fill strategy is incredibly powerful. But this is a offset risk to reward kind of trade. This is, however, how I do get out of drawdown. Let's say I sell here, okay? And now I am in a drawdown on that position. I don't like how big my drawdown is, but I do see that we have exhaustion and we've printed this wick here. Maybe I'm risking 250 to make 250 here. I want to offset that risk, okay, by just trying to make $50 per entry. So I take 2 or 3 entries. I enter here. As it pushes up, I enter again. As I see this coming down, I enter again. So I have 3 trades in this area, and I just want to target a fill of this wick. As it moves down into this area and I get my fill, I've made $150 on these 3 entries, okay? And I can close out this position for a very small loss, okay? Here is how we can avoid getting in too much trouble. In a situation like this, 2 or 3 things are going to happen. We either channel up, okay, and then potentially break out, up or down. We fail and then pull liquidity and come higher, or we pull liquidity, make another attempt, and then fail, and it turns into a downtrend. I don't need it to become a downtrend. I don't need it to fail and continue higher. The only thing I'm concerned with is an upwards channel. If I see that this is channeling upwards and I'm not getting my exits as I'm adding to my trade looking for a small pullback to get out of my first trade at break even, or I'm just staggering positions on pullbacks, okay, it pushes up, I expect a wick entry, I see exhaustion, okay, as this pushes up, this exhausted body, I'm just gonna sell something like that, okay. I see 1, 2, 3 big green bars, I sell at the top, okay. This is how I'm gonna sell into this position. I am looking for a pull on liquidity, and what that means is as we put in pivots, the pull on liquidity will change. So here we have a liquidity area. Okay, it continues higher, so now we need to adjust our targets, okay? Now our liquidity area is underneath this. So now we have an offset drawdown, okay? This is what you need to understand though. As the price moves against you, adjust your entries, adjust your targets to a new pivot, okay? The liquidity did not get taken out here. Instead, it printed a pivot here and buying continued. Now my targets are here. So I need to look for a smaller win rate on these. I could still maybe make $20 or $30 per entry instead of $50, right? Instead of making like, let's say this is 50 points. I have 1 lot, that's $50, Okay, maybe now I need to do something like this where I'm looking to make $27. But I'm not too worried. We have had an incredibly exhaustive move and we're moving into resistance. Again, we get a pivot, right? Pushes up aggressively hard and we break this high in an exhaustion bar. Okay, as this starts to push down, I can sell, anticipating that we're coming into a top area, and now I can target this pivot. Okay, instead of coming down and taking out the liquidity, it creates new liquidity and continues higher. Okay, as we push up, we get top bodies, we get a double top here, right? Some indecision, and it starts to fall down. Okay, I'm anticipating we get a fill of this wick. So as we push up here and start to correct, I sell again. And now we have a new liquidity zone we need to target. Okay, and that liquidity zone is here. Okay, so we need to take out this liquidity, which means now we are going to get $76 from this trade. We are going to lose $37 from this trade, and we are going to lose $61 from this trade. So after this is closed out, we'll lose about $100, and on this we'll make about $76. Okay, so we're going to be down $25 on this position. But this trade, our target is 200 points away. So as it pushes up, comes down, right, comes back up, and it fails to close above this high. Instead, it prints another hanging man. Okay, so we have a candle with the bottom wick. I like these wick fills, so I'm anticipating on a reach above this candle, we'll probably get a fill of this wick. So again, I'm going to enter this trade looking to go short. Okay, targeting what? The primary liquidity that we've created. Okay, so now I have a 214 win and a 225 win and a net minus 25 on these three trades. And what inevitably happens is we come in and we take this liquidity out. Okay, as we take this liquidity out, I would not have traded this. But when this strategy ends up working out very well, what you will see is we take out some liquidity, we go to make new highs, and then what happens? We fail from the highs. If we fail from the highs and we come right back down into that area again, the probability that we're going to break that and continue lower is quite high. So again, as this comes up and starts to fail on a smaller time frame, you could start to take trades anticipating that we're going to break down. And on any pullback, once you have this aggressive sell-off, you can add to that trade, right? You have an aggressive sell-off, you've pulled liquidity, you went up, failed right back down into it, and it was an aggressive sell-off. In an aggressive sell-off where it comes down immediately and interacts with a previous support aggressively, the probability that you're going to break it is in your favor. So on any directional pullback out of this area, it is completely okay for you to sell, right? And as it starts to break down, you can now understand that your pivot area does not necessarily need to be the highs. You can now move it down into a structure. This was retested and failed from, so this is the structure. And as this comes down and interacts with our next area of liquidity, right, we can obviously just move our stops up to break even. But let's say it came down to right here and then pushed up again. I would personally still be looking to add to my position as we interacted with this area, even if we broke back a little bit above it, all right? Because I understand how liquidity works, we are most likely going to interact with that area. Some buyers will see this, they will get in and they will get trapped and the price will inevitably continue lower. So in a situation where it almost comes to my target, doesn't hit it, and then starts to reverse, as we start to get exhaustive buying, I will sell the tops of those exhaustive buy bars. Why? Because they tend to be traps in an overall selling market. So aggressive buying after aggressive selling, I will look to add to my position. As it pushes up, I will add again. And now we have an even better target. Okay, I am not predicting the market. I am interpreting its signals. I'm interpreting its signals and I'm adjusting my risk as it shows me what it is doing, and I am not over leveraging. Okay, over leveraging is the worst thing you can do, right? Size kills. So please avoid taking heavy size. And even with this gold bar here, you can see because this is previous resistance and it's failed 3 times to hold above it, we can just move our stop here. And now our trade looks really great. We have a 3-2, we have an 8-7, right? And we can add on this one, and as it comes up, pivots and starts to fall, we can immediately move our stop like this. We can potentially move all our stops like this if you want. I personally would not like to do that. There have been too many times where I've been stopped out at break even for no reason, right? I want to interpret how the market is reacting. If we start to get a very strong push out of an area, all right, and I break above, then perhaps I'll close out just before I hit my break even. But the thing that scares me the most is when we start to hold a level and slowly creep back up. To me, that shows me that there is low volume in the market and the defense on the sell side is probably dying out. If you see small accumulation against the trend, do not bet that the trend will continue. In a low volume environment, when you see very small candles moving against the bigger directional candles, it does not mean that it's a flag and it's going to fall. Those tend to be the biggest traps. Okay, you want to see active volume in the market, not slow, small volume. Thank you so much again for stopping by and watching my videos, guys. I'm going to continue dropping free content every single week, so make sure you like and subscribe. I'm also launching a Discord where you can tune in, you can keep up with my trades, and I will review all your trades so we can continue this journey together. Okay, if you guys have any comments or requests, make sure to let me know and I'll make a video about that. Thank you so much, and I'll catch you next time.